In United States, the annual GDP growth of 2.3% in Q4 2024 is primarily driven by strong consumer spending, policy uncertainty, and persistent inflation at around 3.2%. The S&P 500 rose by roughly 1% in February, underperforming other international markets. Eurozone. A 25% U.S. tariff on European imports is pressuring automotive manufacturers, with sector stocks declining 5 to 7% since the start of the year. GDP could drop by up to 0.6 percentage points, according to the Kiel Institute. The Pan-European Stoxx 600 index gained approximately 1.5% in February, showing selective resilience in industries such as aerospace and defense. China. The People's Bank of China introduced additional monetary easing measures to stimulate economic activity. GDP growth stood at 4.3%, slightly below expectations, amid trade tensions and structural weaknesses. The CSI 300 index saw a slight dip, minus 0.8%, in February, as investors gauge the effectiveness of ongoing stimulus efforts. United Kingdom. The FTSE 250 witnessed increased short positions, indicating investor caution, though it registered a modest 0.5% gain in February. Quarterly GDP growth is just 0.2%, with rising labor costs putting pressure on businesses. Economic prospects may worsen without more assertive policy measures. Bond markets. In the U.S., the 10-year Treasury yield hovered near 3.9%, reflecting expectations of continued tighter monetary policy. In the Eurozone, the 10-year German Bund yield settled around 2.1% amid heightened inflationary pressures and tariff-related uncertainties. In the UK, the 10-year gilt yield edged up to 3.3%, driven by concerns over slowing growth and higher labor costs. Overall assessment. The global economy is showing signs of slowing, with equity markets remaining volatile under geopolitical and trade headwinds. Rising bond yields reflect expectations for a sustained tighter monetary stance and a generally high degree of uncertainty,